Hi everyone, it's Christian from AgoraOpus here again with a third video of pack of charts. Though before I jump into that, I just wanted to have a quick look at a blog post that was posted a little while ago, and it's trying to explain why the indicator sometimes goes down, like we see here, even though the price of the asset, in this case, Lockheed Martin, sort of continues to go up, right? So why is the indicator going down when the price of the asset is going up? And it's important to understand this, because if you don't understand this, then you'll have sort of misleading signals or thoughts about what this indicator is doing. So again, as I've been sort of trying to highlight multiple times, it's a relative indicator. So everything is relative to everything that we're including in the analysis. So this blog post here, titled "Why is the indicator going down?" illustrates this relative measurement by looking at two different companies, and the graphs here are showing the same time period, right? So this length of time here is the same as this one here, so we can compare them to each other. And of course, this is just two examples of a lot of companies that we look at, but it illustrates the point. So what we'll see, right, is that the indicator here is high and going up initially and then staying high because we're stating that this asset will have a better performance than some other assets, and some other asset in this example here is Lockheed Martin. Now initially Lockheed Martin is ranked very high, close to 100, but as other assets starts performing better, the indicator for Lockheed Martin starts heading down, and as we can see on the top example here, indicator is heading up and remaining very strong, above 100 actually, and that's because this is one of the better performing or best performing assets that we monitor. So keep this in mind, right? Sometimes indicator will go down even though the price is going up, and the reason for that is simply there are better opportunities out there. So whenever you see something like this, right, whenever you see the indicator going down, even though the price of the asset is going up, you should think, well, okay, maybe I should look around for other opportunities, because that's what this is sort of illustrating, right? That's what this is indicating. It's stronger on this one. This one like almost doubles or more than doubles, maybe from like 17 here up to almost 40, close to 40, maybe it's touching 40 just briefly. And that's a lot better return than on this other one here, which is going up by around, I think it was 17% or something I calculated. Maybe it's slightly different, but anyway, it's a lot less than the higher ranked assets. All right, so that was just a brief reminder to everyone how the indicator is working. It's a relative measure, so keep that in mind whenever you're looking into this. All right, let's jump into it. Pack of charts. We released the third one on Sunday, and I'm not going to go through all these companies. You can do that yourself, but I wanted to highlight a few things that I find interesting, and I've been looking into this for the last few weeks, but I haven't really been talking about it maybe. So let me just open up a few of these first. There we go. So I wanted to look at US banks, here illustrated by three companies: Bank of America, Citigroup, and JP Morgan. And what we've been seeing in all of these three, and other US banks as well, is a strengthening in the rank from around mid-March. It's been going up, and the forward-looking estimate, at least short-term, is also heading up across all of them. So that's very interesting. And in my portfolio, I put in Morgan Stanley a few weeks back, because I started noticing this. So it's similar for Morgan Stanley as we see on these three. And you know, that's I think that's very interesting. Are we going to see a continued trend? I would sort of assume so. I sort of think so based on this. So yeah, that's a sector that often I find a bit boring. Banking, you know, big companies usually, slow moving, but for the time being, it's looking interesting with the rank indicator heading up and projected to continue to head up, at least short term. So yeah, that's Bank of America, Citigroup, and JP Morgan. Now I wanted to look at another thing as well. Let's see if I can find it here. Let's see, Netflix. Yeah, so I think I brought up Netflix before, but I wanted to bring it up again because in the previous video, or previous pack of charts at least, I think we covered Disney. Let me check. Yes, Disney's in here. Let me just find Disney. So this is from the previous pack of charts from last week that we looked at. So that's Disney. So Disney, you know, have been in the news recently. They've announced their sort of Netflix competitor service, on-demand video, monthly subscription fee, cheaper than Netflix. And what we've been seeing right on the rank of Disney for some time now, it's been strengthening and is projected to continue to strengthen. And that is very interesting when you compare to Netflix, which has been heading down for some time and is projected to continue to head down, at least short term. So yeah, it's interesting to see how these two companies are compared to each other, competing more directly now with the new service from Disney. And it's interesting to see that we're ranking Netflix down, projected down, while Disney is certainly heading up. So yeah, that's an interesting thing to also think about. And that was all I wanted to do for this pack of charts. You can, as always, you know, go to the webpage portfolio.construction, click on pack of charts. This one is number 3, and go through it. And you know, if you want to receive these, subscribe to the mailing list. If you want even more, go check out the Portfolio Construction Insight platform, where we have all the different companies we're looking at, and there's a lot of them. So there's something for everyone, I think. All right, that's it for now. Thanks again for watching. Hit the like button. Do subscribe. That's very much appreciated. If you have any questions, leave comments. I'm happy to dig into anything you want to look at. And guys, don't forget that, you know, any investment might lose value. So if you're unsure about your risk profile, make sure you understand it better, and seek advice if necessary. All right, thanks guys. Bye.